Hey, have you ever wondered if you should adjust your investment strategy during an election year? I know you're a business owner, you're building your company. Election years can create a lot of fear. They can create a lot of doubt. They can create a lot of worry in investing, in what do you do with your business. All of those different kind of things. You're not alone in feeling that stuff. Aaron and I, we run a business together and we're feeling all that stuff too, right? We're talking to investors all the time. Whether you're a seasoned investor or you're just starting out, seasoned entrepreneur, the relationship between presidential election years and the stock market and investments and the overall economy can seem mysterious. But what if I told you that history actually has some pretty surprising insights? And today on The Exit, we want to unpack some of those insights so that you can set your business and your investment portfolio up for success during this presidential election year. Okay, now nothing we're going to say on this episode should be construed as investment advice, but we just want to talk about history, statistics, data, and help you understand how to position your business for success in this crazy time. All right, everybody, welcome back to another episode.
What's up, everyone?
On The Exit. I'm Caleb, your co-host, sitting here in the studio with Aaron. What's up, Aaron?
Hey, man, good to see you again for another episode of On The Exit.
Absolutely, man. We've been doing this for about a year and a half now.
We broke 50 episodes, I think, or 60 now.
Yeah, I'm not exactly sure what the episode count is totally. I think we're at 50. We went over 50 episodes, which is awesome.
Yeah.
And
talking with entrepreneurs, interviewing them, different facets of building businesses, investing, team building, mindset stuff, so many different things. It's been awesome.
Absolutely. And we're able to achieve the honor of being on the top 40 entrepreneurship podcasts in the country, and definitely honored by that. If you haven't yet, check this out on YouTube. If you're listening, you should check us out on YouTube, subscribe there. But today, wanted to talk a little bit, and we've never really gotten political on this show.
It's about time.
We don't really intend to get political here, although Aaron and I are unashamed of our values and where we stand on the political spectrum. I want to talk more about business owners who are also investors and people who, there's a lot of fear that comes up around election years, presidential election years, and it can sometimes derail people's rational thinking. Right. And I just wanted to tether some of that fear and all of the chaos to like actual hard empirical data, evidence, history, the past. This is not the first contentious election cycle that we've ever been in, although it is a very contentious one. We understand that. It's not the first. It certainly won't be the last. We've had a lot of presidential elections over our country's over plus 250-year history that have been very difficult. We've had the Civil War. This country's been through a lot of stuff. And the truth is that, historically, and I'll just read off some statistics here because I want people to start by understanding how a presidential election does not hurt the economy the way that most people feel like it will. In fact, the S&P 500, for example, has shown positive performance in almost every single election year, according to websites like Bankrate.com and others. Since the dawn of the S&P 500, it's recorded positive gains in almost every single presidential election year. From 1928 through 2016, the average return for the S&P 500 during presidential election years is 11.3%. And then a more recent analysis by T. Rowe Price found an average S&P 500 return of just over 11% for 24 presidential election years between 1928 and 2023. And out of the 23 election years from 1928 to 2023, 83% of those years saw positive stock market gains.
Those are some stats.
That's
good.
And what we have to understand is that then there's all kinds of additional data that post-election years historically perform even better than election years. And that's caused a lot by a new administration comes in, they have new policies, right? Regardless of what side of the fence you're on, right? You're either going to have more conservative Republican come in and they're likely going to do some tax cuts. They're going to deliver on some tax cuts, which is going to incentivize growth, which is going to incentivize economic movement. Or you're going to have a more liberal Democratic person come in and they're going to increase government spending, right? And that government spending is going to what? It's going to fuel and stimulate the economy, and things are going to move. So it's like both of them are not reasons to necessarily fear. Now, I do think it's on the ballot this year, this unrealized capital gains tax.
That's
right?
really
Which is
hilarious.
terrifying for the economy if it
Right.
were to actually go through. So just understand, if
It
you're a
won't.
listener, Kamala Harris is proposing as part of her economic plan a capital gains tax on unrealized gains, which means if you own a property, and there's a net worth limit on it right now, but guess what? When the income tax was first instituted, it had a net worth requirement too, and now every single one of us pay income tax. It's just how it happens, right? So don't think that it'll never touch you just because it's not going to touch you immediately. But 28% capital gains on unrealized gains, which means you own stocks in the stock market and they grow by $100,000 and you don't sell the stocks, which means you don't actually have $100,000. You just have $100,000 in value. You build a business and that business is valuated at $50 million or you whatever, but you don't actually have that cash in the bank. You could be taxed every year on those gains that you haven't realized. It's terrifying. Where
It's actually not possible.
It's not, because where are people going to get the money to pay those? Right? So understand, like, we're talking about this. There are real things around a presidential election that you should be thinking about. But the truth is that the overall movement of the economy during a presidential election cycle is fairly stable historically. It's a lot more stable than it feels, right?
Yeah, I think a
Just
lot
from
of
a
that
sheer
too
numbers.
is you think about all the big drivers of all of the national and international companies and everything. They're more stable and long term in their thinking.
Yeah.
So they're not going to make decisions based on who's going to be president.
Right.
And so I think that a lot of that is going to be the underlying factor of the market increasing over those stats that you mentioned, because they're not just dumping everything. People aren't shutting down their companies and people are just chugging along over the long term. I think. And so I think that can be like, I'm just thinking of Coca-Cola. They're just going to do this forever. And regardless of who's in or what cycles or what narrative, or it's so polarizing with both sides of both camps politically, but that doesn't change business in the sense of people are just going to keep making as much money as possible. And trying to do that and navigating through whichever election cycle it might be.
Yeah, no, absolutely. I do think it's important to just delineate, just for our listeners to have these pieces of information so they can know how they should be positioning their investments. They can actually think through, not necessarily know how, but really just even know how to think through how should I be positioning investments as well as my business. Overall kind of portfolio performance, right? When a Republican candidate is elected versus when a Democratic candidate is elected, right? So if you look at overall portfolio performance post-election year when a Republican is elected is about 15.3% growth. When a Democrat's elected, overall portfolio performance is about 7.6% growth. So there's definitely about twice the lift when a Republican is elected versus when a Democrat is elected. But what I want us to note there is this fear is over how much will my portfolio grow, not will I lose it all? And everyone has this fear of I lose it all, but historically, like, these are the averages. Like when a Republican gets elected, you're going to make about 15.5% on your money the following year. When a Democrat's elected, you're going to make about 7.5% on your money the following year. And that's just historical since 1928. When you're thinking in the big picture, why do you think, Aaron, that so many people get afraid to invest during presidential election cycles when it's like actually there's positive opportunities?
Just uncertainty. Yeah, that's such a big part of it. I think for me personally, it doesn't change anything for me. Yeah. Because I'm just trying to buy high quality assets and hold them for long periods of time. Yeah. And I guess to me, the alternative is like not investing, I guess. And so I think I'm always looking to be an investor, but I am a longer term investor in the sense of I always want to be buying and holding through any kind of cycle. Whereas other people are more market timer
Yeah.
folks. I don't know. The market timing thing just doesn't work out.
No.
I'm not a fan, and it hasn't worked out for the people that some people you get lucky, but I
Yeah.
don't want to do it based on luck or external factors even that I can't control. I'm even thinking about multifamily real estate, which is an asset class that I invest in. There's people that are like, I don't want to do multifamily right now.
Yeah.
I want to do some other type of asset class. And for me, I'm like, maybe I'm not as in tune with all the different nuances in the market and everything, but I'm just going to keep investing in multifamily
Yeah.
forever. And I'm not going to be dumb about it. I could adapt the strategy a bit.
Totally.
New research could inform my buying and things like that, but I'm not going to just stop and sit it out because I think it's an asset class that's good long term. So I think even whether there's an election cycle, whether there's interest rate movement, whether there's regulatory changes, those things could inform, I think, our investment decisions. I think they should, or we should be aware.
Yeah.
Like this thing you mentioned with this new proposed tax, which I don't think is possible for it to go through, but let's just say it does. Am I going to not try to create wealth because of that? I'm still going to do that. I guess I have to create more now because they're going to take some of it.
Yeah.
And so I always have to be active.
No, I love that. And I think it's such a good mentality to have because it's the idea of time in the market versus timing the market. And that a lot of investors, they talk about you want to buy low and you want to sell high. But then when you look at like right now, the current opportunity, those are the people that aren't doing anything. The people that say they're trying to time the market and buy low. And right now is when you do that because right now there's opportunity, there's distress in the market. I'm talking specifically in real estate, measure of distress in the market. So now's the time to buy, double down, invest. Let's go. You said you were timing the market, waiting for the opportunity. This is the opportunity, and it's just trying to wait for things to be a little better and just feel a little safer about it. Wait, I thought you were looking to buy low. You have to buy low whenever there's blood in the water, whenever there's fear in the market. That's when you can buy low, right? Specifically, I'm talking real estate.
Everyone says that, and it's harder. It can be hard though.
Oh yeah.
I've gone through 3 basically recessions as a real estate investor, and every time it's always you get worried and I'm not one of those people that is like a market timer or really that worried about investing. But I feel it too.
You get that, the fear in the market. So I think presidential elections they do. They just contribute to fear. It's all emotional. The economy is more a reflection of human behavior and sentiment than it is actual like dollars and cents, right? What actually makes sense. It's all how people are reacting to various scenarios. And
there's so many people sitting on the sidelines for more philosophical reasons.
Totally.
Or emotional ones.
Yep.
And even people that are smart. There's a lot of money sitting on the sidelines, smart money.
Yeah.
And they don't have to invest, and they're not necessarily because of fear not investing, but they're just waiting. They're just saying, who's going to get in? What's 2025 going to look like?
Yeah.
Well, and I guess that's kind of Mark-ish.
Yeah.
But, I think, the news cycle contributes so much. If we just shut off the news, if we didn't have the news, it would be a completely different investing environment.
Oh, totally.
Because that drives so much of it, and half of it's false, and
it's controlled and it's manipulated, and it's
people don't realize that they're trying to make money, right? They're trying to get clicks, they're trying to have views, and so it's all not that they don't care about it being true, but they're trying to get you to watch the news.
Yeah, and fear sells. People like you get people afraid, so that their eyes will be glued, hoping they get an answer, and then they'll end up buying stuff that they don't need to address fears that aren't real, that were manufactured just to get them to buy it. And so it really is. Yeah, there's a lot of opportunities, right, through media and through different platforms. So that's I think folks who are investors, who are business owners, I think one thing that we can do is we can just speak the truth, talk about like how we don't need to just listen to what the machine tells us,
right?
But actually think for yourself, think critically, speak out on the fact that, hey, everyone wants you to be afraid to invest right now because all of the big institutions that control billions and trillions of dollars, like they want to create and produce fear in the market so that they can buy things at discounts and take money out of your pocket because you're not making a move. They know exactly what they're doing. I used to trade in the stock market, swing trade. My entire strategy, I was quite successful at it. My entire strategy around it was trying to match the movements of the large institutional traders, the big banks, using technical analysis, like trends, to look at when's a high probability that a larger institutional whale type investor, like a big Wall Street bank, had unfulfilled buy orders or sell orders within a specific range. And I would set all my trades in spaces and places that match that criteria. Now, why would I do that? Because I know those big institutions have the ability to move the market up and down at will because they have so much volume. They can go in and buy up a bunch of stuff and then dump it all back into the market all of a sudden, buy it up again and dump it all back in the market again and create that up and down volatility, right? And then so then they can say, okay, if we dump all of this, it'll go down to here, then we'll buy it back and it'll push it back up and we'll sell it again and all these suckers will buy it and we'll lose. And so don't think for a second that mass media, all that kind of stuff is not doing the same type of stuff. And so my encouragement to all of our listeners is think for yourself. Look at when is it actually the time to take advantage of opportunities, to expand, to grow. Last thing I'll say when we wrap the episode up is Grant Cardone. Love him, hate him, indifferent to him, right? You can't deny that the guy's experienced a tremendous amount of success. He would credit his reaction to the 2008 recession as the single biggest contributor to his success. When everyone else was retreating, he doubled down and went hard and destroyed the competition, left everyone in the dust, and has built multiple 9-figure revenue companies at this point. And so I think if you can do it, build your business, invest, buy real estate, whatever it is that the thing is, if you can do the thing when it's really hard to do the thing, then it will pay off in leaps and bounds in the long term. So during an election cycle, do the things that are hard to do right now. It's almost always the right path. The most difficult path is almost always the right path, especially in business.
Yeah, and remembering it's cyclical, right?
Yeah.
We talk about these cycles. It obviously
a cycle.
comes back around. Yeah. Warren Buffett's like my favorite quote from him is like our favorite hold period is forever.
Yeah.
And he just buys a really something that's a good asset.
Yeah.
And just keeps. He's not, oh, well, I'm going to sell it because of this cycle or this candidate or none of that matters.
Yeah. No.
It's buying something with good fundamentals and seeing that through for a long time and managing it, ensuring that it's cared for, that asset, and managed.
Totally.
But thinking long term.
Yeah, absolutely. That's a good conversation, just off the cuff, sort of kind of conversation here.
For sure.
Had some cool stats. And anyway, thanks everybody for listening to Own the Exit.
Thanks everyone. Have a great day.
We'll see you next time.